So clearly the low point was the 46% sales order declines in the quarter. But you said that January is trending a little bit higher. Can you just tell us what you're seeing there in terms of demand?
Yeah, we started out the year and it's been pretty strong. The spring selling season obviously starts right about now, and so we weren't sure what to expect. We let the street know that our sales per store had more than doubled since Q4. Q4 was very, very soft given the interest rate climb that occurred. And we had a lot of cancellations where people backed out of their home purchase, waiting to understand what the rates were going to do, kind of understand what home prices are going to do. But the consumer is re-engaged early in January. It's a little early to tell whether it's going to be sustainable, but certainly January's numbers were promising.
What's happening on pricing and costs? Because we've seen costs of lumber come down significantly. How is that impacting the economics?
Well, prices are down across the industry, both existing homes and new homes. Depending on who you talk to, they're down single digits to double digits. In our business, we're focused on affordable housing. So we build throughout the Southern Hemisphere, and we focus on the first-time home buyer. Our ASPs are down from a high of $480 all the way down to around $380 since that time, middle of last year. So down about 20%. But we're seeing a big response to that as rates have risen. We're focused on that affordable payment, and we're seeing consumers sort of re-engage. Costs haven't come down that much. There's some opportunities there. We've seen lumber fall off pretty dramatically. We're saving 5% a house on our lumber costs, but not nearly much as prices have come down. So margins are down. We reported our margins this quarter around 25.5%, down from 29% earlier this year or earlier last year.
Some analysts were wondering if there's a price war happening in certain markets. You're in some of the hot spots, right? Texas and Florida, where everybody's building right now, especially larger competitors like a D.R. Horton. Is that happening?
Yeah, I think you articulated well. It depends where you are. In the parts of the country where prices ramped up pretty aggressively over the last 2 years, specifically the western markets, Phoenix, Colorado, parts of California, certain parts of Texas where prices were up 20, 25, 30% over the last couple of years. We've seen prices come down, and you're seeing builders compete with incentives, all forms of incentives. I wouldn't call it a war. I would call it more of getting competitive, getting back into a payment that makes sense for our customers, given where the current rate environment is.
So what does that mean for supply and the pipeline in these markets, and how that's going to affect you?
Supply's really low across the entire industry. I think that's why, in my opinion, housing's on pretty solid footing throughout the country. Outside of the demographics, the supply, we've just really been underbuilt in a lot of our markets. So there's not a lot of supply on the used home market. Most customers that have bought in the existing home market have locked in on low rates, so they're staying put. And really the supply is coming from the new home sector, which is where us and many others are operating. And then when you think about affordable housing, again, under 400,000 across the country, it's really undersupplied, which again is where we're specifically focused on. So there's not a lot of supply. The customers that are coming out and searching for homes, they're finding that there's not that supply. And I think that's why we're seeing, new demand come into the spring selling season, a little bit of a resurgence, if you will.
I guess I'm just trying. So is it as simple, Phillippe, as if you're trying to forecast what's happening in housing as figuring out where mortgage rates are going, and that's why all these stocks have rallied so much, because rates are off their highs? Is there anything more sort of permanent in terms of the demand destruction created here by this big downturn?
Well, I think interest rates are the number one factor. I think when rates are accessible and available to the larger population, you see stronger housing demand. That being said, I think the lack of supply in the market and all the household formation that's occurred over the last decade, and then the lack of underbuilding that has occurred as well, has created an opportunity where demand and supply is still very much dislocated despite what interest rates are doing. But interest rates is the key to the whole thing, and interest rates have stabilized. They've trended down. Yeah. They've been in the mid to low sixes. kind of settled down over the last 90 days, and they may be going lower based on what we're seeing today. And I think buyers are definitely re-engaging at those new rates. They're probably fearing that rates are going to go back up, honestly. And so they're trying to get in now and get a home given the current rate. We offer a lot of move-in ready inventory across the country, and that also seems to be a significant preference of consumers right now. They're wanting to move now. They're wanting to move in the next 60, 90 days. They want the ability to lock in that rate so they're not exposed to the rate volatility if it were to go back up.